This is a 3-bedroom, 2-bath co-op. The top floor of a walk-up building is the 4th floor of a walk-up, listed at $765,000. This is really a starter apartment in Brooklyn. Young families, young professionals, everyone. This is the first-time home buyer for the most part price point.
Since the credit crisis, it's been pretty tough to get a mortgage for apartments like these in Brooklyn. The reason is that the loan you need is just a little too big to qualify for a federal government guarantee. That means that your lender will be on the hook for the loss if you don't make the payments, and banks have been pretty reluctant to make these kinds of jumbo loans. The result is that for borrowers, the interest rate on jumbos has been substantially higher than it has been on traditional mortgages, at least until recently.
In New York City, one of the most expensive property markets in the nation, the availability and the price of jumbo loans matters. Cash buyers always have the edge, especially with the current shortage of properties for sale. But jumbo mortgage issuance is up 15% in the past year, so at least potential borrowers have a chance to play.
Well, nationwide, it's the same thing. As mortgage lenders are seeing that the economy is improving, they are more apt to enter the market, the jumbo lending market, and more people are going to be available. However, the standards are still pretty strict. They are loosening up, but they are still pretty strict in order to qualify for a jumbo loan.
The greater competition amongst lenders is one of the reasons why interest rates on jumbos have converged with the rates on standard government-backed mortgages, which are called conforming loans. Banks are enjoying the profits they're making from keeping jumbos on their balance sheet. But there are also the stirrings of a secondary market, and lenders like JP Morgan are experimenting, slicing and dicing packages of loans and selling them to investors. On the conforming loan side, the government has started charging something closer to a market rate for guaranteeing these loans, and those extra fees are being built into standard mortgage rates, making them slightly more expensive. And in some areas of the country today, you can even get jumbo loans on better terms than conforming mortgages.
In metro areas, the houses are usually more expensive: Chicago, LA, New York. So as a result of these areas being more expensive, jumbo loans are more prevalent. And as more of these lenders are entering the jumbo loan market, it's going to keep those jumbo loan rates down.
Regulators and politicians are debating if they can wean the US mortgage market off of its federal government subsidy. If jumbo loans can be made readily available at decent rates, then maybe the rest of the market can also stand on its own 2 feet. There might never be a better time to try.
About even 6 months ago, we may have seen 2 or 3 offers on this. We now expect to see almost 30, and that's weeding through. And that goes back to your mortgage, your loan. Everyone here would be in the jumbo position, or right on the cusp.
There's some way to go still to repair and to reform the US mortgage market, but the housing market has been picking up for some time now. With that premium on jumbo loans now all but eradicated, and long lines for open houses, it's not a bad time to be a realtor in Brooklyn. This is Stephen Foley for the Financial Times, Brooklyn, New York.
Less than 20 minutes. It's 5 stops to 57th Street. No, I'm sorry.